if you look at the present market scenario, both of the major indices, right, or even the benchmarks like Nifty 50 is at an all-time high. Bank Nifty has been trending, right, even in the last 3 days, even in the last week. So overall, Bank Nifty also has been stronger, right? So yesterday, both Nifty and Bank Nifty has reflected very good strength. The broader index has been good. But if you dig deeper, the mid cap or small cap, there has been a decent correction there. To notice is the small cap index has been below the 21 days EMA and even on the verge of breaking 50 days EMA also, right? On a daily time frame, 50 days exponential moving average, it is trying to break. So the overall market, the large cap index wise has been okay, but the mid cap and small cap, if you are seeing a correction, we have to be more cautious, right? So cautiousness means, is it a bearish market? Not yet, right? So we cannot say that it's yet completely bearish market, or we need to exit our positions, or we need to clean the portfolio. No, it's something that we need to be very cautious and we need to follow certain rules. So some of the important factors of what we need to do in this present market scenario we'll be covering in our today's discussion, right? So I'll repeat, we have to be cautious, and cautiousness does not mean it's a bearish market. So let me share my screen and let's discuss about how we need to be cautious. And it's not the time wherein we reduce our positions or we get rid of the entire positions in the market like that. No, right? So first of all, whenever you're looking at the charts, any company, right, or even in a sector, right, or even in a sector, for example, if you see like a higher high, right, and even a lower low formation, right, there are two things, higher high and a lower low formation. So let me explain this with an example. So if you see here, this is like a higher high and higher low formation, right? HH, higher high formation. And this is like a lower low formation, right? During a downtrend, price makes lower lows and lower highs. So the stocks which you are analyzing, you have to compare whether it is in this kind of a trend of an upward trend where you are getting a higher high. This is your, if you see, yes, this is your high. Again, we are having a higher high, right? And this point, yeah, this is your high. This is your higher high. And this is again your higher high, right? Similarly, you see, this is your low. This is your lower low. And this is your lower low, right? So you have to, irrespective of the broader market, right? Irrespective of the broader market, on the stock specific, especially on the small cap or even on the mid cap, we have to be a little bit more cautious, right? Now, this is one of the main reason I always say a portfolio should be a little bit diversified in various sectors. Maybe your portfolio can be comprising of around 20-25 stocks like that, wherein if it is diversified, right? So if one sector is not doing well, maybe the other sector will pick up. So the overall portfolio returns will be maintained, right? Will be maintained. And every market is like cycles, right? Is like cycles. So the prime aim of an investor to create wealth in the market is he need to sustain in all the market cycles for a longer period. For example, in equity, what do we see? If we are seeing a 6 months or a 1 year of consolidation in the market, another 3 months or 4 months, we see a very good rise. So we get a very good profits, right? If we are seeing a 1 year, 1.5 year, very good upward movement, a bullish market, maybe after that we may see a little bit correction or a consolidation happening, and then again a bull run will start. So these are the cycles we have. So if you are able to sustain those market cycles where it is a correcting market or it is a bearish market, and you are able to cover these cycles and you're sustaining, right? Sustaining is the most important thing we need to note. And if you are sustaining these market cycles for a longer period, that is where wealth is created. And if you are only targeting, sir, I wanted to know that base or the correction period, I'll completely be away from the market and I'll be in that bullish period, right? No one can time the market, right? No one can time the market. Rather, we can take our positions accordingly, right? As per the market, as per the risks associated, we have to modulate our investments. Second, trend is your friend, right? Right? Whoever are averaging down or going against the stocks which are continuously falling and adding them, right? So that's not good. Always trend is your friend, right? Trend is your friend. And when the stocks are in momentum, then you can add. The best thing what you can do is any mid cap or even the small cap, when they are correcting in a heavy way, right? Do not try to bottom fish right now, right? And as I said, a structure of lower highs is good on the selling side, as each bounce will be sold off, which means, sir, a stock, a very good stock, but it is falling. And should I use it as an opportunity to buy, or should I use it as an opportunity to reduce my position? Whenever a stock which you have entered for short term, and if the EMA wise, if it is falling below your 21 days EMA, or even it is falling below your 50 days EMA, you should reduce your exposure, right? You should reduce your exposure. And fourth, previous swings will now act as resistance in downtrend and support in uptrend, right? Support in uptrend. So let me give you an example. Let me share the screen of TradingView, right? Let me share the screen of TradingView. Now, if you see overall Nifty wise, yes, we are seeing the market at all-time high, right? The broader index, but Nifty midcap, right? Nifty midcap index, or even your Nifty small cap index, right? Even if you look at CNX small cap index, we are seeing a reduction, right? Or we are seeing a loss of strength here, right? Loss of strength here. And if I load an EMA 21, right now, small cap index is below your EMA 21. And even if you look at EMA 50, it is trading on EMA 50, right? On EMA 50. So similarly, any stock in your portfolio which is declining below your EMA 21, it's preferable we reduce our position and not to add, right? Not to add. And whatever is the resistance it is breaking out. For example, if you see here, right, during December, small cap index has broken this resistance from almost 18th of December till the month ending 29th of December. It has been a strong resistance for small cap. So this is broken here, right? So at this juncture, this level of 15,000 is the resistance for it. And after it has advanced, now this 15,000, after the resistance is broken, it acts as a support, right? It acts as a support. And luckily, during January, it did not break this support level, and market has again continued to move up. Right now, this levels of 15,000 is a very strong support, right? So earlier it was a resistance. Now it is a support, right? Now it is a support. And anything below 15,000 would bring more weakness to the small cap index, right? To the small cap index. So this understanding of previous swings will now act as resistance in downtrend and support in uptrend. Okay. Second important point, volume and price analysis, right? So here, one thing we have to note, whoever the positions, even in the small cap or in the mid caps you have in your portfolio, any mid cap or small cap which is falling also, the volume wise, we did not see a great volumes, right? The selling was not up to the higher levels that we are expecting a completely bearish market. No, right? It's just the correction, and yes, it is imminent that in the last 1 year or even in the last 15 months, if you see, the mid cap and small cap index has moved to a subsequent higher levels. So this kind of a healthy correction is required for the next bull run to start, right? For the next bull run to start. So one breather is the volumes have not been significant with respect to the price fall, right? With respect to the price fall. So if I give you like couple of scenarios, in any situation where the volumes and prices are increasing, we can consider it as a bullish market, right? When there is a high volume and the low price movements, right, we'll be a little bit more careful. It is a cautious market, right? Cautious market. And the trend is going to change. Low volumes and high price movement, right? Low volumes and high price movements, which is there is a greed in the market. Euphoria is driving the market, right? Right now, this is not the scenario, right? So there are certain market levels where the prices will increase significantly well, but there is no strong buyers coming up. So maybe few players control the market, right? Few players control the market. And in the last scenario, low volumes and low price movement, which is a fearful market, right? Which is a fearful market. And this is a market where we will be considering maybe like a bearish market like that, right? Nil supply and almost nil buying due to fear. Right now, we are not in a fearful market. Yes, the prices are lower, right? The prices are lower, the prices are declining. Volume wise, right? Volume wise, the sellers are not very high. Similarly, buyers are still there in the market. Only thing is that there is a shift from mid cap to small cap to large cap. And if you have been attending our sessions, even from the last couple of weeks or even 1-2 months, I've been focusing that large cap is one index where it did not participate in the last 1 year bull run, right? So yes, we can look at large cap also now, and it's not immediate that we need to shift our mutual funds from mid cap mutual fund or a small cap mutual fund to immediately to a large cap mutual fund, right? It's not required, but any fresh exposures into any mid cap mutual fund or even small cap mutual fund should be on hold for now, right? The existing funds we need not change because the last 1 year or even 2 years, small cap index or even mid cap has moved by around 30-35%, right? Even if there is a small correction, hardly if market corrects by 5%, maybe in your mutual funds it will be like 10-12% max. But to recover that 10-12, just couple of months is sufficient to recover. So the existing investments, I don't think so we need to immediately move out or shift it to large cap. But any fresh investment, it's ideal to look on large cap. Similarly, on stock wise, right? On a stock specific, the positions which we have already taken into mid caps or small caps, we have to be a little bit more cautious, and 3 things to be followed. 1, strict stop loss should be there. Second, any fresh positions should be very, very selective. And a smaller positions we have to take, right? The position sizing should be smaller. Third, most important, ideal entries. Any entry we are taking right now, as I said, should be selective, right? Should be selective. And enter stocks on breakout, right? Which are like, maybe it is going to a 52-week high, right? Have a lot of demand. There is a buying interest there. And some of the pharma companies, be it like your Natco Pharma, right? SMS Pharma, even in this market, they're exhibiting some very good strength. Even yesterday, even in the market, when there is a mid cap, small cap correction, VBL was sustaining, right? VBL is sustaining, even though the last quarter was a little slow quarter for that company, right? And we basically want stocks that are in demand, where prices keep going up, right? So where there is a demand, we can always be there. And in the setup wise, as I said, right? So whoever are bottom fishing or trying to catch a falling knife will have more pain. Rather, you should look like buy high, sell even higher, right? Buy high, sell even higher. And any ideal entries we are taking now should be very, very selective, right? Should be very, very selective. And please remember, cash is also a position, right? Cash is also a position, which means even you're not adding aggressively, you are holding in cash, you are waiting for an opportunity. That's also good in this market levels, right? And to have a better win rate, your positions which you wanted to enter, right, should be in this kind of a trend, right? So this is a high, this is a higher high. You take this as a low, this is your higher low, right? This is called as higher high and higher low setup, right? Higher low setup, right? So these kind of a setup are ideal entries to have a better win rate. And look at the volume, right? Look at the volume when there is a breakout that is happening, right? When the stock is consolidating and when the price is breaking out, see if the volumes are also coming out strongly. Fourth, stocks generally retest the breakout area, hence add 50% on breakout and 50% on retest, which means, for example, sir, there is a company which I have already invested, it's going well, and after a period from almost 15 days, right, from almost 30 days, right, the stock is not moving anywhere. Majority of the railway stocks, if you see, right, majority of the railway stocks, if you see, right, so it is consolidating. So if you have already had your position, normally during this base creation we do not add, right? Normally during the base formation we do not add. But yes, if it is moving sideways and it is further breaking out, which means this is the resistance for the stock, and when it is breaking out, if you have added like one position here, right, your second position can again be added during the breakout, right? During the breakout again you can add. Or even anyone who have missed taking that position, when it is forming a base and it is breaking out, here you can add a fresh position as well, right? Fresh position as well. Similarly, in the same stock, when it is declining and it did not break down this zone, it is just going flat, and from here again it is moving, right? Again it is moving. So this is again a retest area, right? A retest area. Again here we can add, right? And one of the additional factor to consider is during this breakout area, if there is good volumes coming up, there is a good buying interest, right? If there is a good buying interest, this is a further add-on for us, right? This is a further confirmation that we can be there. And lastly, momentum is highest in RS positive stocks, right? So if you load your relative strength indicator with respect to Nifty, if the stock is RS positive, right? If the stock is RS positive, then we have to be there, right? Preferring RS and negative stocks is not ideal, right? Preferring RS negative stocks is not ideal, because the stock which can create more wealth, or the stock which can do well for a period of time, should at least beat the returns of Nifty, right? So choose stocks which are relative strength wise positive stocks, right? RS positive stocks is what we need to prefer, right? So these are some of the things I wanted to discuss with you, so that we'll be more cautious in the market. And it's not a bearish market, but we have to be selective in picking up mid cap or small cap companies. Do not chase the returns, rather follow the process and have a clear exit strategy in place. So let me know below what are the pointers which you will be following going forward in this market scenario, right? This is a very interesting market because the broader index wise is positive, but there is a small correction in the mid cap or small cap and a healthy correction is required for the next bull run to start, right? Just that we'll be more cautious. And as I said, we need to sustain different market cycles for a longer period to create wealth, right? To create wealth. And no one can avoid a falling market or a sideways market. It's just that the loss we face during a falling market or a sideways market should be less. And when there is a bull market, when we maximize it, when we take the maximum advantage of it, then the portfolio will be looking wonderfully well. And that's what a smart and an intelligent investor will be doing.